Something seriously strange is going on with Tesla right now. DC Bank cuts target price to 140 from 170. Okay, that's just one analyst, right? Yeah, UBS cuts, Canaccord cuts, Truist Securities cuts. Another one cuts. Citi, though, did raise. This is all happening after earnings. In the last 5 days, Tesla stock is up almost 20%. So what is happening? Why so many analysts are cutting their Tesla stock price targets? However, I did some more research and I see Deutsche Bank raising their price target, and Bank of America actually upgraded Tesla stock from neutral to buy, and their price target is $220. And if you like seeing that upgrade, click the like button. I'm not seeing any downgrades, by the way, only cuts. And meet Kevin, who runs his own ETF, has rebought Tesla stock just now. So it's seriously strange to see Tesla stock rally, but analysts cut their targets. Now, Tesla did report negative free cash flow, but the auto gross margin was quite a bit better than expected. And Elon did say that sales will increase year over year. I am okay with the cash flow because I want Tesla to keep investing as much as possible. Today, the markets are up, but Tesla stock is down. It was actually up at first, but then this news came out. 2 US senators say NHTSA should require Tesla to restrict autopilot use to certain roads. There's also more, but this next one I don't think is impacting Tesla stock much. Drew Baglino sold $181 million of Tesla stock today. Some of the proceeds will go to paying taxes. So the Tesla bears are making a big deal of this, but they conveniently forget the fact that after an executive leaves a company, the stock options have to be disposed typically in 90 days of leaving the company. Otherwise, they become worthless. And so every single person with a functional brain would do exactly what Drew just did, unless that person is a Tesla bear, because, you know, some of them actually think that betting against Elon in the long term is a good idea. So no wonder why they would have that logic as well. So this news is important, but it's basically nothing. He still holds about 30,000 shares worth about $5 million. Well, this is great news for Tesla stock investors. Washington State launches a new EV incentive of $9,000 per vehicle. And a 3-year new EV leases receive a point of sale $9,000 rebate. So you can get a Model 3 for $127 a month with zero down. If you live in Washington State, it absolutely makes no sense to not buy an EV. You can buy a Toyota BZ4X for $56 a month, which is, yeah, at that price I might consider it. Oh, but maybe it's really hard to get that EV rebate from Washington State. Well, they do have an income requirement. You are eligible if you make 300% or below of the federal poverty level in household income equivalent to $93,600 a year for a family of 4. So the people that are price sensitive to vehicle purchases, they will all qualify. So for Tesla, this is great news. It's not a huge state, but when they are practically giving these EVs away, it does make a difference. So Tesla bulls are celebrating. Tesla has launched the new Quicksilver Model Y color in the US for $2,000 extra. It's only available for inventory long range and performance Model Ys at the moment, though. I do like the color quite a bit, but this color is my favorite one. This will help with demand of Tesla vehicles a little bit, so this is good news too. Elon Musk was supposed to go to India right before earnings, but he didn't, which I think probably is actually a good thing because it just shows how focused he is currently with restructuring Tesla. But Tesla's India electric vehicle plans reportedly still on track despite Elon postponing the meeting with the Prime Minister of India. So probably everything is going according to plan over there, just that there's going to be no official announcement yet. And I think at this point we can safely say it is not going to be a vehicle factory, at least not a factory that would be built quickly. Because on the earnings call, Elon Musk did say that Tesla can build 3 million vehicles per year without building a single additional factory. So it will be interesting to see what Tesla is planning specifically for India. Seems like it would be an investment of $500 million in manufacturing facilities within 3 years. There's also speculation that maybe the Prime Minister is not going to be re-elected, and we'll know very soon in June. So maybe Elon Musk wants to hedge his bets cuts and only come to India once the election is over. Oh, and did you know that India became the third largest auto market in 2022, overtaking Japan? Cybertruck is now in Australia as well. Is going to be getting some serious attention in Australia. NHTSA. Oh, NHTSA. NHTSA has launched an investigation into Tesla's autopilot system, focusing on whether recent software updates adequately address safety concerns. NHTSA is doubting the effectiveness over the 2 million vehicle recall last year. The recall, if you remember, marked the conclusion of the NHTSA's years-long investigation into crashes of Tesla vehicles on autopilot into stopped emergency vehicles on the highway. And before, in the defect notice, Tesla made it clear that it doesn't agree with NHTSA's findings of improper driver monitoring leading to these accidents, but it agreed to add more warnings and alerts when drivers are using the autopilot features, hence a recall. And we had quite a few complaints from Tesla owners that all of these extra warnings were actually counterintuitive, distracting drivers. But now there's a new investigation. Now, Electric says the original recall always felt like a compromise. The fact that Tesla didn't agree with NHTSA's findings and that the actual recall mainly consisted of mild increases in alerts looked like significant compromises on both sides. However, the driver monitoring through the cabin camera is fairly strong right now. You cannot look away from the road for more than 3 seconds without getting an alert. But Electric writes that there is an unfortunate way to bypass that, and maybe that's exactly what NHTSA is investigating right now. If that's the case, okay, I can accept that. Gary Black just made this bullish post, and it's getting quite a bit of attention. After 2 days digesting Tesla analysts' report and commentary, the product outlook from Tesla's earnings deck, and Elon's matching commentary on the earnings call remain the key bullish takeaways and are likely why Tesla stock is up 19% since announcing earnings. There's no other way to interpret this language than that Tesla is readying new, more affordable models using both the next generation and existing manufacturing platforms for first production before the first half of 2025 ends. That is bullish since it means Tesla is still on track to expand its TAM with more affordable, maybe compact, vehicles to the mass segment by mid-2025, and that the $25,000 next generation vehicle has not been canceled or indefinitely postponed. Reuters is not exactly factually incorrect, because the next generation vehicle that would be built solely just on the next generation platform, that is not going to happen for a while, because the next few vehicles are going to be built on this in-between platform. So Tesla is basically going to do what it did before with the Model Y. It didn't reinvent anything really, it just took the Model 3, okay, it works, now let's make it a little bigger. So definitely don't expect to see a vehicle that looks like a Cybertruck or something that's radically different. However, the Cybercab, which should be unveiled on August 8th, that of course is going to look like a Cybercab, I think. Gary continues, that said, in my opinion, Elon's assertion that Tesla is doubling down on autonomy is still not catching the hearts and minds of the institutional investors, despite many bullish assertions to the contrary. Did Gary Black watch Ron Barron yesterday? Ron Barron is all about autonomy now. He loves it. And he has billions of dollars worth of Tesla stock. And he called for the Tesla stock bottom being now. He says, buy now. It's time to buy now. He said the word now many times. We haven't seen much discussion about Tesla's robotaxi opportunity by analysts or buy-side investors, which is not necessarily a bad thing, because it just tells you the moment FSD gets even better and some of these analysts try FSD themselves, they're gonna get all over it. A price target increase after a price target increase causing a big rally. I don't know exactly when that's going to happen, but it really is just a matter of time. Gary continues, Uber, which we own, is down just 2.1% since Tesla's earnings, and Lyft is down 5%, so it's fair to assume investors still don't see Tesla's unsupervised ride-hailing as a major risk to Uber. That may all change on August 8th, but so far, Tesla's continued focus on more affordable non-robotaxi vehicles seems to be what's important to investors that don't put a lot of emphasis on what's going to happen in the next 10 years in regards to autonomy. So as Gary isn't Ron Barron an institutional investor? Yes, he is, but the analysts and their clients seem more focused on the more affordable vehicle. The message is still quite bullish. Gary did personally experience FSD V12, and he says it's amazing. Now, I watched the drive that Gary Black experienced, and based on what I experienced with FSD V12, under similar conditions that Gary experienced FSD V12, I think it was really bad when Gary was in the vehicle. I don't know, maybe just Chicago, maybe it's much better in Vancouver, but I never had FSD just blow past a stop sign, even if there's some dirt on the stop sign. And keep in mind, I got FSD after there was another point release, so I was driving on a newer version, so maybe it was that particular version that was not as good. I'm not quite sure, but I do know, based on what Elon Musk is saying, that the next few versions should be noticeably better as well. So I'm really looking forward to trying FSD v12.4 and 12.5. And we know that Omar is now able to go without takeovers for days and days and days and days and days. And it's only getting better. And Omar says if FSD v12.3.5 can walk through a crowd of students at UC Berkeley, I have no doubt Optimus will be able to do so too. I am sure he's right. Edgecase is pushing FSD to its limits. This is a very difficult left turn, and out of the 5 times that they did this, it was fine 4 times, so there was 1 failure. It will be interesting to see how good the next version is going to be. And there's very strong evidence now that FSD just turns on turning signals for other people. You can see that FSD clearly thinks that the car is going to turn left, but when you look at the actual vehicle, the turning signal is not on, but this is great. Wow, Ray says FSD left turn is so naturally human-like these days. From point A to point B, disengagements and interventions are rare. For me, if I drive in a simple city, yeah, they are rare. If I go to downtown Vancouver, I'm gonna have some. But usually it's not safety related, it's just FSD doing something rude, so I don't want to get honked, so that's why I take over. Omar, though, has a complaint about FSD. V12.3.5 can never just change lanes. It has to start changing lanes, then come back to the original lane, then change lanes slowly. It's super annoying. Now, I don't really experience that, but I have 12.3.4. Elon says fixed in 12.4. So that's good. Look at the data from Omar. He basically doesn't drive anymore. Miles driven 67, miles on autopilot 66.46. And he's not sure he has enough Tesla stock. It looks to me that he only drives at the very end, probably when it's time to park. There's an interesting observation from Jeff. There's so much training compute needed that major megacap companies have to publicly raise capex estimates, knocking hundreds of billions off their market cap. But yeah, AI silicon is cyclical. Maybe. Question is, do we know what part of the cycle we're in? Look at this headline. Meta, Facebook, loses 200 billion in value as Zuckerberg focuses earnings call on all the ways company bleeds cash. Yeah, well, Tesla also spent a lot of money on AI, but it actually went up, unlike Meta. This is one complaint I have about FSD as well. Every time FSD slams on the brakes to stop at a yellow light, I scream in anger and pain. Usually it's completely fine, but just now I had an experience where a yellow light came on and a car on the right side that was slightly behind me, it just went through the yellow light and it was fine, no issue with that. But FSD decided to stop, and it stopped pretty quickly. I had a passenger in the car, and the passenger was like, what are you doing? I mean, the passenger did not freak out, but it was not comfortable. It was definitely not a selling point for FSD. FSD reacts to yellows faster than I could, but it does so way too aggressively. Definitely, I agree with that. I also had a few times when a yellow light comes on, the car just suddenly starts slowing down, but not fast, just a little bit. And then it makes a decision, okay, no, I'm not gonna stop. I'm gonna go through this yellow light, so then it accelerates again. So slightly faster decision making would be better in this situation. Either Tesla needs to improve the code, or better computer hardware probably would be helpful there. I drive on hardware 3. It's not a safety thing, it's just a comfort thing here. There's a crazy story from Korea. No one was actually hurt, but it was a crazy situation. See this guy? He has a knife, and that vehicle is a Tesla vehicle. I don't think the vehicle was locked yet because he just got in the car, but this guy couldn't figure out how to open the Tesla vehicle door, which I guess in this case worked out very well. Seems like the guy eventually was arrested, and we have all had those of us who own a Tesla vehicle. We all had to explain to someone how to open the Tesla vehicle door, but it's not always a negative. AJ says, I think I figured out why Tesla's leasing share dropped to an all-time low in Q1 and why we should be very bullish about Q2 2024 deliveries. Well, he definitely got my attention now. Tesla's leasing rate reached an unprecedented low level and was likely also a result of Tesla's temporary inability to ship vehicles to customers before Q1 ended. Tesla's overproduction peak is evident. A true demand problem would have caused Tesla to throttle production. Tesla prioritized shipments to non-leasing customers since non-leasing or outright purchases are more attractive financially to Tesla. An outright sale looks much better in Tesla's profit and loss statement than a leasing sale due to significant differences in accounting. Q4 in 2023 was Tesla's all-time best sales month and, similar to Q1, experienced a very low leasing share. Yeah, definitely pretty low. The low leasing rate plus record sales suggest acceptable demand at the Q4 2023 levels. Tesla didn't have to pull the leasing lever. Only recently in Q2, Tesla launched attractive leasing offers. I believe this is a signal for a significant expansion of deliveries. For these reasons, I believe the Q2 volume will be near at least the Q2 2023 level of vehicle shipments of 466,140, representing a giant 20% quarter-on-quarter bounce back from Q1 shipments. The bar to cross 466,000 deliveries still appears low due to, number one, excess Q1 in transit inventory due to logistics, not demand, arriving early in Q2 from logistical issues, rapid Cybertruck ramp, possibly adding conservatively near 10,000 units in Q2, implying production rate of just 769 per week, which seems possible since Tesla already reached 1,000 Cybertrucks per week for at least 1 week. Ramping new Model 3 in Fremont plus recently launched Model 3 performance version should generate additional reversals from Q1. A headwind becomes a tailwind. Then, of course, seasonal tailwind. The global auto market always experiences a stronger Q2 versus Q1. So he believes we have sound reasons to be bullish for Q2 deliveries without falling into the uber bull camp. However, medium term, the discussion around deliveries will increasingly lose significance as investors start to increasingly recognize Tesla's AI product opportunity, of which FSD is only the first. Yeah, but I think that could take a while. It has to be in your face, too obvious to ignore. And I specifically say too obvious because sometimes analysts miss the obvious. So it has to be too obvious so that even Tesla bears cannot ignore it. I think some of the points from AJ were fairly decent, but I wouldn't be as bullish because in China, we know that Tesla actually did cut production. So I think Tesla did experience lower demand as well, but the reasons that AJ presented are also somewhat valid. So I am definitely not as bullish as AJ in Q2 in terms of deliveries. Oh, and AJ is making another big call. Absent a major disaster, I am calling it now. $140 was Tesla's low in 2024. This was April 22nd. I think Gary Black, Russ Gerber, and Gene Munster sold Tesla around that time. Kathy Wood was buying a lot. Remember this, guys and gals? And by the way, if enough people start saying that, people are actually going to go back into the stock. The people with the cash, the people that were on the sidelines about Tesla. Ron Barron is saying the same thing. And Meet Kevin actually just rebought all of his Tesla stock, and not too long he was shorting Tesla stock. By the way, I watched the entire 38-minute video from him, and he's not putting any value on FSD, basically, or robotaxi, in the sense that he's not counting on FSD being solved, and he doesn't expect robotaxis from Tesla anytime soon, basically. But one point that he made was, well, Tesla just posted really good gross automotive margins, and that was in Q1. That was before Tesla had to lay off a lot of people. And of course, we all feel bad for the people that were laid off, but Tesla's business got restructured, so it's going to be more profitable going forward. And Tesla also hasn't finished using up its capacity. There's room to expand. So as Tesla ramps and releases these other new models and utilizes its capacity, margins are going to improve even further. He basically thinks that the bottom for Tesla stock would be about $150 $150 per share, and that's his sort of bearish take on things. But when it comes to upside, he sees the stock going to $360 maybe if everything goes really well. This is by the end of 2026. Keep in mind, he's not counting on robotaxis or anything like that. Whoa! XAI reportedly is raising $6 billion at an $18 billion valuation in a round led by Sequoia. Okay, well, at least seems like we don't need to worry much about Elon Musk selling more Tesla stock. He can just raise the money. As Tesla has been doing price cuts all over the world, we now see a price cut in Korea as well. There's a poll: which company makes the most sense as a first to license FSD? Most people think it's Ford, and the second company, BYD. Warren, though, disagrees with the result because BYD makes far more BEVs than Ford and is the largest EV maker in the world. Number 2, BYD is already a Tesla partner selling blade structural batteries for Giga Shanghai and maybe also Berlin. And number 3, Ford is backing off BEVs. BYD has to want to license from Tesla. I think Ford is a much more likely option because Ford was the first one to license Tesla's charging standard. So there's already history of that. And FSD, I think, is first going to work in North America and not in China. And BYD, I think, is still of the opinion that full self-driving is basically impossible. So if they think it's impossible, why would they license the technology? Now, maybe they changed their mind, but I'm not sure that's likely.
No, this is the real deal. You have to remember these companies like Microsoft, right, the most valuable company in the world, used to be a software company. Then it was an internet company. Then it's a cloud company. They're all becoming AI companies. I'm clear there's two kinds of companies by 2030, those fully utilizing AI and those are out of business. It's going to be that fundamental. And when you look at these companies, Brian, it's a question of, do they have what it takes to really succeed? Do they have the team? Do they have access to the data? Really, where's the data coming from to train these AI models? Do they have the compute, or these massive H100 and soon H200 clusters? And then do they have the output deals? Do they have the means to take AI and generate revenue with it?
Tesla, of course, has a team. It has the data, has the compute, and it has the way to monetize all of this through FSD. So by 2030, Tesla is going to be among one of these companies that is going to be thriving.
Bernstein's Tony Saganaki sticking with his underperform and 120 target.
Well, look, I think on the positive side, bulls can say, well, there will be some new models coming out, hopefully over the course of the next year. I think the concern going into the earnings call was that Tesla was all in on robotaxi and self-driving, and that was many years away and was going to abandon a low-cost car or new models. And what we heard on the call last night was that there would be some new models and that they would come relatively soon within the next year. I think my skepticism is really around what might those new models be. It takes a long time to roll out a new model. Even just getting safety approval in the United States can take a year or more for a new model. And, clearly designing a new model has taken Tesla typically 2 to 4 years. And so the question is, will these really be new models or tweaks on existing models? And if they're tweaks on existing models, can they really be stimulative to Tesla's growth, which is the key issue for investors?
Because Tesla used the word models, not just model, I would imagine it's basically going to be both. There are going to be tweaks on the existing models, and then there are going to be new models. But it's going to be built on the platform that's an in-between platform.
Profound improvements in version 12. What do you make of those ideas?
Look, I think FSD is and robotaxi are both a technical question as well as a regulatory question. I think technically there's still a ways to go on FSD. Tesla's come a remarkable way. But the edge cases are really, really tough. I've been driving and using the trial for the last 3 weeks, and there are definitely, limitations, everyday limitations where I've had to be very alert much of the time. Great progress, but still a long ways to go. I think more importantly is just the regulatory challenge. Waymo started doing, self-driving trials in Nevada in 2012. It took them 10 years to get permission to do a robo-taxi in the state of Nevada, and that has to be replicated in every state. So you have both a technical challenge, which I think will still be years before you can get the edge case, and then you have testing and a regulatory challenge. So I do think we will have a self-driving future. The world will benefit from that. I just think it will take 5 to 10 years. And it's not clear to me that Tesla will be the only person or only company who solves this problem.
Comparing Waymo to Tesla, I think, is a mistake in this case because Waymo only has a few cars. Tesla has millions of cars on the road. So Tesla can collect data very quickly to show to regulators, hey, look, when people use FSD, they don't disengage. They supervise, but they don't disengage. And we can see that crashes don't happen as often. And if FSD gets so good that you will not use it just on easy trips, that data will not have only the easiest parts of the driving. It will have all sorts of driving within that data.
Let's just, as a hypothesis, say Tesla gets to full self-driving in 5 years from now. And certainly that would be value creating because people would pay for that. It could enable regulators permitting to be a robo-taxi. But my belief or fear is that almost every innovation in the automotive marketplace over the last 50 years has ultimately been priced away because of global competition and benefited consumers. So you can think of anything from airbags, which first came out at $1,000 a pop, that are now standard 10 airbags on every company, on every car. You can think about backup cameras, blind spot detectors, even self-parking now. All these things were premium features that first movers were able to command a price premium for. And now none of those, they're all included as table stakes in the price of a car. And so I think that's the long-term concern ultimately, is the competitive nature of this industry makes it very difficult for anyone to create something that is sustainably different and charge for it. And so maybe there will be a period where Tesla has full self-driving and no one else does, and Tesla can extract a high rent. But I think that's a difficult assumption to make for a long period of time, given very credible competitors like Waymo, who are in the self-driving space and have done tons of testing over the last decade.
Okay, I think it's obvious that FSD is going to be quite a bit harder than making an EV. Now, here's a big question. How many companies are there on the planet that can make EVs profitably in the US? Just Tesla? So if they cannot even do such a simple, easy thing, according to Tony, pretty much, how are they going to collect all of this data and then catch up to Tesla eventually? I mean, this is not a hardware problem. This is a software problem. And once you win, you'll just keep on getting even more data. So your safety is only going to accelerate. And with FSD, every single crash, I think, is going to be highly publicized. So having the safest FSD software is going to be a major advantage. And Tesla is going to get there first. And by default, Tesla is going to be the safest at first. And therefore, Tesla will be able to get better even faster than everyone else. That's it for today's video. Make sure to click the like button so that we can make sure that there's no shadow ban on this channel. Here's another video from my other channel showing that it's only getting about half of the views it would normally get because my videos are only shown to about 50% of the regular viewers in the first few days. And then after the first 3 days, it does push it out a little bit more, but because it's no longer news, it's old, no one's interested. So I appreciate everyone clicking the like button. That really helps. Thank you so much for watching. My name is Matt Postius, and I will see you back in tomorrow's episode.